I don't know everything, nor do I try to act like I know everything. But one thing that I do know for sure is that AMC is about to move big. And we're going to go over that here in this video. Really what I expect to happen with this Fed meeting, where AMC could land by the end of the week. We're going to give you guys the bull case, the bear case, and the base case scenario of this Fed meeting. This is the most important Fed meeting in over 2 years. There's high expectations. Fed Jerome Powell will be very hawkish, and we've seen the consequences of this in the broad market over the past 2 weeks or so. We know what has happened with AMC, so let's talk about this big bounce. Let's talk about AMC moving big here in this video. Hit that like button for me if you guys have bought the dip, if you're holding on to your shares, or if you just like this video in general, as well as consider subscribing to the channel, and make sure to check out the comment down below that is pinned in the comment section, as well as the link in the description to check out Public to get some free stock. So AMC just closed up 5.42%. Up in after hours 0.04%. So overall, this goes without saying, today was a strong day and something that we have been needing to see for quite a while now. We've seen a major bounce and just a big move in general. Think about this, guys. We were down 12% when we first started trading today in pre-market. We closed up 5%. That was a 17% round move from the bottom to the top, and I only think this is just the start, as the data that I'm going to present to you guys is also telling me. I'm not pulling this out of my ass. I'm not trying to be your cheerleader here. I'm trying to give you guys my honest, open, transparent analysis into this situation and what's going to happen by the end of the week. So it's very important to know the 3 things that matter with technical analysis. If you're subscribed to this channel, you already know this, but it's support, resistance, moving averages, and the volume. So what happened? We bounced off of the $20 support level, just like I thought we would. With a 12% down day, I mean, we would have had to drop over 15 to 20% to see a strong move under $20. So this was right in line with what I've been saying on this channel for quite a while now. Bounced off the $20 level. Now we are closer to the $26.50 mark, which is going to be our first resistance level, than we are to going back down to $20. So to see a move down to $20 tomorrow, you're going to need a down about 18% day. And I don't think that is going to happen. A lot of people have talked about the gap fill down to about $17.50. I don't think that's going to be the case unless Jerome Powell comes out and says something the markets have not priced in. But like we went over in the last video, the markets are already pricing in some very hawkish things for Fed Jerome Powell's speech tomorrow at 2 p.m. The markets are pricing in 2 to possibly 3 times faster tapering speeds for the bond buying program that will likely end the first week of March. They should have this concluded. It's unknown if this is actually going to happen, but it's widely expected to be announced. What will cause AMC to move down a lot is if Fed Jerome Powell comes out and says, yeah, we need to raise interest rates like ASAP, like possibly in the next meeting. Expect the markets to take a turn to the downside. Expect AMC to take a turn to the downside and retest that $20 level or even that $17.50 level. But I don't think they're going to act that fast to start raising interest rates. So all in all, I think the downside has already been priced in, and I think we are pretty much set up for perfection, set up for this rally. And like people talk about all the time, I know you guys have seen the comments. Every big short squeeze trade has went down before the short squeeze happened. And that's exactly what we have been seeing with the volume. And that's very key to point out, is low volume heading into high volume causes short squeeze. You will never see a short squeeze that consists of high volume going into lower volume. It just will not happen. That's kind of why the whole rumor about just holding your stock was just bullshit from the start, and that definitely didn't help anything. But that's really a side note here. As far as the volume, we did see heightened volume today, 106.2 million shares that did trade hands, but comparatively to the last short squeeze that we did have really in June, where we were having over 400,000 for volume for or 400 million for volume on an everyday basis for about 2 weeks, this is still way less than that peak volume that we were seeing. Even back here, 1.2 billion shares that traded hands, or even back in August when we did see those days of over 200 million for volume. So I do think volume will continue to increase as the people that sold out of their positions during this last downtrend are likely to buy back in. And that's all fine and dandy. I don't really consider those people apes, but it's buying power. It's buying power. I'm not going to argue with it. But overall, I do expect volume to head back into the stock, and I do expect that move above $26.50 per share. We'll talk about where exactly I think we will stand at the end of this video, because I do want to go over the end of the day data as well, like the Ortex data and really the option chain, which is telling us we're going to see a big move either way this plays out, to the downside or to the upside. I'm about 80% confident we're going to see that big move or continued big move to the upside. So as far as the Ortex data, we'll run through this just briefly. 19.41% short interest of free float. Short interest is exploding. No other way to put that. Short interest change on the day is 3.56% to the positive. Estimated shorted shares at about 99.58 million. Take these numbers with a grain of salt. Like I say all the time, the short interest is well over 20%. We all know that. Now the share utilization is 76.24%. That is a given as well. Free float out on loan 20%. Days to cover 2.33. That's the most bullish thing we have going for us at the current moment. This is telling you it's hard for shorts to get out of their short positions. If they all wanted to cover or needed to cover for whatever reason, it would be hard to do so. And while we're on this page, let me just remind you guys that all indices closed down quite substantially. NASDAQ 100 down about 1%, S&P down over 0.5%, and the Dow Jones down 0.24%. So it was definitely a strong day, even if you compare it to its peers or what the indices did today. You can tell it's a strong day and there's a lot of buying power heading into AMC stock. That is no secret whatsoever. Now, as far as the stock tracker data, this is key. And I know I've went over this in other videos, but I want people to fully understand where this logic comes from. As puts run from out of the money into the money, like we have seen over the past 2 weeks, shorting has to happen by the market makers to hedge for the downside, or to make sure that they can oblige for all these contracts that are now into the money. And that's been happening over the past 2 weeks or so. So that's a big reason as well why we have fallen, as well as short ladder attacks, spoofing, and hedge funds shorting the stock. That's quite obvious, right? But what you need to know is how many days do we have till expiration? December 17th. We're going to have 2 real full days of trading after the Fed meeting, which is tomorrow at 2 p.m., to really digest what is said and to see this big move. So once these puts go from into the money back out of the money, if there's 1 or 2 days left to expiration, you're going to see instant de-hedging. De-hedging consists of market makers buying shares to essentially offset the shares that they sold for the puts that ran from out of the money into the money. So that is one source of major buying power. The second source is going to be, at the same time as that, as the stock is going up, all of the calls that have ran out of the money are now going to have to be hedged for as they run into the money. So 2 fronts of buying power from the market makers alone, because we are only looking at 22,856 calls that are in the money, 411,000 calls that are out of the money. So we have a significant amount of potential buying power that is here on the table, and it's really hard to put this into context on how this could really affect the share price, because if you see even half of these numbers that have to be hedged for on a 20% positive move, or whatever, the dollar amount is, it's hard to put that really into context, because there's just so much buying power or potential buying power that will have to go into the stock. So definitely a lot to be excited about. We've been waiting for this volatility for the past 2 months, and now that it's here, we got the paper handers out of the stock. Now we have the diamond handers, we have the apes holding shit down, getting to the MOAS very, very shortly. In my personal opinion, I'm not a financial advisor. I'm not a financial planner. I'm certainly not your dad. That is my take on the situation. A lot of this theory comes down to the option chain, but also at the same time, you can't fail to realize that the short interest has went up a lot over the past 2 weeks. So those short-term traders, right? People that aren't necessarily or I should say, haven't been short on AMC this whole entire time. Not the people we are really fighting against, but the people that jumped in here like, hey, the stock's going to go down. Our colleagues are shorting it. Mid caps are being shorted, as well as Omicron's here, and they're in a hard hit sector. If Omicron were to develop into lockdowns or something crazy, why not short the stock for a week or two? You're going to have those people that don't want to be in the stock once it rebounds to the 40s that are going to want to get out in a rapid fashion as well. Considering days to cover, 2.33 days to cover, they're going to drive the share price up, and they're not going to want to stay in their short positions, meaning they're going to want to get out either Wednesday, Thursday, or Friday. They're not going to want to hold on to this and watch it go back up to the 40s and lose half of their money, if not, some of their gains that they could potentially have if they shorted this in the mid 30s. So that is really the situation. As far as on the technical basis as well, there is a lot going for us. We are approaching the resistance level, which I assume it's going to be a resistance level. We have not actually confirmed this yet because we have not rejected off of this, but $26.50 per share and then $28 per share. I will be watching this level, and it would not surprise me tomorrow to close in between $26.50 and $28 per share. It would not surprise me whatsoever, and that's kind of what I imagine is going to happen. That would be a 4 to 5% move again to the upside to close in between this range. And then ultimately, if we break out above 28 will serve as a support. And then by the end of the week, I think we are going to break out past the 200-day moving average, especially if Jerome Powell's speech comes out in lines of what we are expecting, which is already very hawkish. So if he comes out and says something that upsets the markets, he's going to have to say something very drastic. And I don't think the Fed is going to change courses that fast. I don't know what to expect for January, February, or March, but I don't think it's going to be on this December meeting. And I think a lot of people are pricing in a lot of very hawkish things, and they're going to have to reverse some of those short positions and some of those short bets that they have on the marketplace once they realize it's not as bad as we thought. And that's one thing as well. I've called this out in many videos. If you guys have not been invested in the markets for a while, with these peak fear catalysts or these just big fear catalysts, think about the debt ceiling, think about the election in 2020, think about Delta, all of these situations that cause a lot of fear, including the Fed meeting on Wednesday, they're always the worst until, or I should say the peak fear, until the catalyst is over. After the catalyst is over, people realize, oh shit, we kind of overreacted. Let's de-hedge these short positions and start going long on the markets again, because the markets always seem to rally. It's not really rocket science here, what I'm saying. Just trying to give you guys the concept and the gist of what is going on, because a lot of people, they say a lot of crazy claims and have no theory or thesis to back it up, and that's not what we're going to do here on this channel. I am here to provide you guys an opinion, an honest, open, and transparent opinion on what I think is going to happen. So take it for what it is. It's not confirming anything, but simply suggesting the data and what the data is telling us. Now, we are up about 0.5% here in the after hours as well, so definitely seeing a lot of volatility, but overall a good reaction. Now, as far as where I expect to end on Friday, like I said, just my opinions, I think we will come up and retest that $35 level, or at the very least in between this 200-day moving average and the $35 level. The 200-day moving average at $31.98 per share. That's what I expect. That's really my best case scenario is about $35 per share. My base case scenario by the minimum is in between $26.50 and $28 per share to close out the week. Worst case scenario, you come under this $20 level, but that's going to be a huge move to the downside, and I don't think that is really logical after this big move that we did see today. So forget the haters, forget everything that you guys have heard. Congratulations for holding on to your stocks and just keeping the positivity alive. I know that doesn't get said a lot, but that's a big thing, and I'm very grateful to be a part of this community and you guys that support here on this channel. So hit the like button for me, consider subscribing to the channel, check out the link for public down below in the description of this video, as well as the pinned comment down below. Go ahead, follow me on Twitter, as well as check out the link for the buy and sell alerts. We have been playing the downside S&P puts, Apple puts that have been printing tendies. Check that out if you guys want to be a part of it. Ask me personal questions over there 24/7, 24 hours a day. So love and appreciate you guys. Thank you for watching this video. I will see you in the next one.